Riding into work, I reviewed the daily report card of a developing trader with this month's goal of sizing. Some might read her trade review and wonder, is she making too many trade decisions? Often you hear traders lament they need to hold their winners longer, or traders carp, they should have given a trade a much bigger stop. As an active trading coach, I generally prefer a different approach for consistent trading. I notice much better odds for active trading success when traders are able to make more trade decisions and still stay in the real trade. Traders who can cut trades not as likely to work based on what they're seeing in markets. Traders who can get out of a trade and then back in after noticing the trade more likely to work. Traders with the open-mindedness and nimbleness to change their minds quickly about risk on and risk off. So goal this month, appropriate sizing. BXC. Scratch trade got started with a super small size to start getting a feel, and that was trade decision A for how it traded. Didn't like how wide the spread was and how thin it was, never initiated an actual position and didn't force a trade here, so that was good. CRIS, same as BXC, started with a tiny size but never saw a good setup. Trade decision B to actually trade, so just got out for a scratch. Again, good job of not forcing trades. NTNX lost money but was actually pretty happy about this trade. Saw a setup I really liked, saw a weakness on the tape and started building a position for short, sized up to tier 3 risk, sized down on the bottom of the channel when there was clear support in the 50-80s. Trade decision C, and got out when my risk was hit. I think my plan was good, had a clear level that I trusted to risk off of, and I followed it. The execution of my plan was pretty decent for the most part. The only thing I did outside of my plan was I covered part of my position near the top end of the range, just 2 cents below my risk, because I was a bit scared at that point. Recognized it after I got out, so I got right back in. Trade decision D. So let's just go over some of these trade decisions that this trader made. Trade decision A. She starts small, looking to make another trade decision to get bigger. Trade decision B. She makes a trade decision not to get bigger while looking to make another trade decision. Trade decision C. She sized down, making a trade decision in a trade she started with the intention to play for a big move. I love the nuance here in this trade. She will go for it if the trade is really working, but lighten up at technical support and its strength on the tape. This is just excellent trading here. And then trade decision D. She exits because she feels potential slippage, thus making a trade decision. I really like her protective decision making here. If you don't feel right, if you don't feel you can control your risk above your stop, slippage, better to exit and reevaluate and avoid a huge rip. Then she gets right back in after feeling the risk of slippage is not what she feared. She makes another trade decision. This is an important active trading technique she's archiving of her real-time trading in this review. Certainly, too many trade decisions harm performance for many. Too few trade decisions thwart the progress of many developing traders. How many trade decisions you will make inside your trading playbook is a large area of study for the new, developing, and experienced traders.